Well, thanks for joining us today. We appreciate it. I think there was a lot of good information shared earlier regarding the general economy. These are obviously unprecedented times, and we are all seeking answers. And I think data and information in some ways changes every day, and in some ways, frustratingly, it doesn't. But glad to be here. We want to first thank one of our sponsors and specific sponsor to our portion of the pod, which is A10 Capital. A10 Capital is a national lender headquartered in Boise and lends exclusively on commercial real estate, featuring non-recourse, short-term bridge, and long-term permanent loans. So thanks, A10. We appreciate you being a partner on our podcast. Just at high level, want to share a really brief background on Chap and myself. We're both natives of Idaho. I grew up here, and my original background is as a CPA. Came back to Idaho 14 years ago to raise my family of 5 kids, including triplets. And we've been very happy to be here in Boise. I've been at Colliers all 14 years. Looking back at the transactions my team's been involved in over the years and to date, it's roughly $1.3 billion worth of transactions. Over $430 million of that relates to apartments. In today's world, we kind of saw nationally that transaction volume is off. It's been not the way for us in Boise. Extremely high demand and opportunities. We've closed this year roughly overall, including all property types, just on our team, just under $130 million year to date, and with another $100 million under contract today. Of that $100 million, $85 million is apartments that we have under contract. So we have a good pulse on buyer hotspots, seller hotspots. Chap, you want to give a brief background on who you are and what you're doing?
I grew up in Boise, as Clay said. I'm married to a beautiful wife named Elise, and I have a cute little Vizsla puppy named Peaches. My favorite thing to do in Boise is go river surfing on the Whitewater Park in town. I went to college in San Diego and came back to Boise. I missed it so much. Back over to Clay.
Yeah, so Chap's a young hustler. It's been great to have him on the team over the last 18 months, and he's a quick study, and he's done an amazing job. We try to integrate a lot of the questions and interests that people have had into our presentation. If we have time at the end, we'll look at the additional questions that are asked through the podcast. So you'll see there's a feature where you can add questions or ask questions, and we'll try to field those. But we're hopeful that given a lot of the questions we received earlier, we can answer them. It was alluded to in the earlier session, and I think that one of the common questions is about the concern of oversupply and construction. And the information we share today hopefully will provide a little bit better perspective on that. So just oftentimes when people come into town, we give them the kind of chamber tour, the quick snapshot of the market. Many of you are familiar with this quick snapshot, but we thought it would take just 60 seconds. You can see when we talk about the Treasure Valley or the Boise Valley, it covers this shape like a football on its side, comprised of 2 counties. So you have Ada County on the east side and then Canyon County on the west side. More than 2/3 of your population and commerce are in the Ada County side, with Boise being the state capital. Many that have visited downtown, comment on its vibrancy, given that you have the Boise State University just across the river, you have the state capitol in downtown, and then many other businesses. And it creates a really vibrant downtown any night of the week. Of course, this is pre-COVID. Any night of the week, it would be very difficult to get a reservation at a restaurant without booking it in advance. It's still quite a popular place, and when people have visited in the COVID window, they've remarked at how clean the downtown is and how welcoming it is. So we'll get into a little bit of the specifics of the market and where we're seeing a lot of the construction. But in general, this is the Treasure Valley. You can see Canyon County is a lot more agricultural based. Boise has a really strong central commerce downtown. And then some of the bigger office parks that have been built to cater to more of the demographics of the entire market are off of Eagle Road, which demographically has been the center of the valley. And then now a lot of action at 10 Mile. We'll talk about that as well. That's the newest freeway off-ramp that has been added to our, to the city or to the valley, and a lot of growth there, which we'll talk about. All right, Chap, go ahead and talk about next phase here.
Occupancy in Boise has always been strong. These two graphs show occupancy trends from 2015 to 2020. The graph on the left, a little messy, compares Boise to similar cities in our Western market. Let's focus on the graph on the right, shows Boise in light blue. As you can see, Boise has stayed north of 96% and has trended even near 98% occupancy since 2015. Even during the recession, occupancy was even north of 90%. The Boise market has a strong story of occupancy and performs slightly better than the Western market average at 95%.
Right.
Cap rates. Cap rates in Boise have been compressed since 2011, have been compressing. On this graph, Boise is represented by the yellow line. The orange line at the bottom represents the average of major metros across the West. The gray line represents non-major metros. The blue line is the US apartment average. Boise multifamily cap rates have been historically similar to non-major metros. Now you can see since 2016, the cap rates have been starting to compress quicker than the non-major metros. And now in 2020, we are now averaging similar to the major Western markets. This is because the perception of risk has changed in Boise. The market is becoming a safer place to invest, and cap rates are now trending at an average of about a 4 3/4 cap.
Yeah, and I think this is an important story. You can see how back in 2011 and 12, there was a risk premium associated with Boise as a smaller tertiary market. And as Chap shared, that risk premium gap has closed out over time to where in 2020, we are on par with the Western apartment market, including the major metros. Obviously, we're not exactly on par with the major metros, but when you take the average, you've seen a significant drop in that gap. As we think about rental rates in Boise, and we'll talk about the growth or the change in rental rates, but initially, just to get for perspective, we picked various cities throughout the West that we thought had some similarities to Boise, whether they were geographically similar or similar in size. So we included, Seattle, obviously very different, but geographically, one to consider. Portland, Sacramento, Reno, Colorado Springs, which has some similarities in size. And then we took the West region average and then included Salt Lake and Spokane. So these will be cities that we compare through a few different phases. But you can see how Boise's rental rate, it's on average $1.37 per month per foot. It's lower than the majority of the cities that we polled and compared. Salt Lake is similar, Spokane is lower. The West region average is higher, and then obviously the Pacific Northwest is significantly higher. We think about people moving into the valley, more than 2/3 of the growth comes off of the coast. And so those coastal renters are used to seeing rents, Portland and Seattle and the Bay Area, which we didn't include. So Boise offers an extremely attractive opportunity for them to come into a market with significantly lower rental rates. Now, in that context, think about where our rents are today, and think about where they were in the past. We've had quite a run in rental growth. So this is a 5-year percentage change in rents by these same cities and markets. So you can see only Reno is the only other market that's outpaced Boise in rental growth. Boise over the last 5 years has experienced about a 37% increase in rents. Even with that 37% increase, we're still on the lower end of the rental scale compared to the West region. Okay, we're going to switch now. Okay, so now we're going to get into the kind of meat of construction, and Chap's going to he'll show a map that shows a lot of the dots of where construction is going, but I wanted to highlight the 10-mile off-ramp. So in the first slide, we showed the overall market. 10 Mile is the newest off-ramp to the valley, had ground and access and where people had good access to commuting. It's shown that within this business park, which is 10 Mile Crossing, you can get to anywhere in the valley within 20 minutes. So that became very appealing, and then the ability to acquire ground with less NIMBYism or neighbors that are opposing apartments. But if I were to draw, probably a 2-mile ring around this off-ramp, I can show about 1,200 units that are either recently completed or under construction. So just a few examples. The lofts at 10 Mile up here at Franklin and 10 Mile with 240 units completed. And they now are on their second phase, which is another 236 units. South of the freeway, the Wolves built Indigo, which is 336 units. Another 64 units were built here. And then Corey Barton's adding units as well down this pocket. If you move up to Franklin and 10 Mile on the northwest side, the Franklin at 10 Mile is a larger project that was completed a few years ago in phases. Entrada Farms is coming in. They're about 238 units. And then Berea is another project being built, which is another 240. So a lot of construction is occurring in the 10 Mile corridor. And we'll jump to the next slide and kind of show a map of where all the other construction is going.
Yeah, this map takes that 10 Mile exit. You can see on the left, click it, circle it, and downtown. And it's just putting dots with the unit count inside it. This map's a little bit, maybe 6 months or 3 months out of date, but this shows a real good estimate of what's going on. The dots, the dots are showing market rate multifamily units in Ada County that are being proposed, under construction, or just completed. Recently completed has provided a 10% increase to our unit count, which is about 1,500 units. Currently, there's another 17% increase under construction, which will be 3,700 units. As you can see on the dot map, the predominant growth is in Meridian on that left side. This is due to the availability of development ground. The Meridian is where development's heading, between Canyon County, Nampa, and Meridian, that farmland is being developed. Our downtown market has a strong demand as well. We are seeing rents at $250 per square foot, which is higher than most major Western downtown metros. With Boise's need for catch-up on apartment units, we don't see this increase in units being a deterrent of our market. Worst case, we could see hotspots like the 10 Mile exit described by Clay in that last slide, maybe having a few years of slow rent growth, but overall, Boise needs more apartment units, especially with our extreme home appreciation and home prices.
Yeah, so as we move to the next slide and we talk about context of construction, I think it's important when people hear percentages like that, they think, oh, we have overbuilt. How does a market absorb 15%, 25% of added inventory? Clearly a market needs to grow. And we see our market being impacted in multiple ways, not only by way of added migration into the market, but there are other factors as well that play into an apartment dweller being a longer apartment dweller than they have in the past. And part of that has to do with home pricing. Chap will get into it on the next slide, but if you think about, if I go back 20 years, and then we'll kind of come back closer, but if you go back 20 years, apartment owners, it was a common story. They had an apartment dweller there for 6 months while their house was being built. There was a clear ceiling on what rents could charge because it was so easy for someone to transition from apartments into a starter home at under $125,000. Go back 10 years, affordability was extremely attractive here. It was easy to still get into a starter home. And so you had limitations on where you could push rents. That clearly affected current apartment performance, and it was a deterrent to new apartment development. And so we'll get into that. I'm going to jump to the next slide, but that's some context for the percentage of units added is high, but we see the absorption of that being very healthy.
Yes, yeah, this graph shows the residential home appreciation of Boise compared to similar metros. Boise is represented on the left in light blue, and it has performed far better than Spokane, Tri-Cities, Colorado Springs, Salt Lake City, Sacramento, and Reno. Home appreciation in Boise has been fantastic. Since 2017, residential pricing in the Treasure Valley has increased 46%. Just in the last 6 months, pricing has increased 17%. We are seeing more California plates in Boise than ever right now. Local first-time homebuyers, like Clay said, are having troubles buying that starter home with pricing just jumping off the charts in town. The renter is renting longer, and there's a lot more renters, especially with the mass migration to our city. Over to Clay.
Yeah, so this is an important part of the story. Home affordability has shifted, dramatic increase. And if we were to go back further, everybody knows we have over 100% appreciation, but our market is led out from other Western cities in home appreciation. So the next graph shows what we did is we pulled, and this is again some limitations on the data, but the data pulled 50 unit projects or larger, and they were only market rate. So we did not pick up on the affordability side. So we took every apartment as a percentage of the population of the MSA of these various cities. And our assumption was that each apartment had 2 residents per dwelling unit. And so this is a pretty dramatic graph that shows the various cities that have as apartment stock, what percentage of their residents live in market rate apartments per capita. So you can see Reno is the largest one at over 16%, just under 17%. Sacramento, 11.5%. The average for the West cities that we pulled was just a little over 10%. Boise sits below 6%. They're at 5.5%. And so, if you took this as pure data and for what it shows on the graph, you'd say that Boise's apartment stock could double to play catch up to its Western peers in apartment units per capita. So again, the reason that this happens is in the past, home affordability was so attractive that it was a deterrent. Now that home affordability has shifted, we believe that this trend line will migrate closer to the other Western market cities, that we'll see a fair increase in the percentage of apartment residents per capita. All right, so we thought it'd be important to address what we see from a COVID-19 impact to our market. I think in the earlier session that was general, it talked about various trends, and it spoke to the cities that are seeing an out-migration and those that are seeing the greatest in-migration. The coastal cities are losing population. Obviously they won't become destitute. They're big cities, they're big markets, and as things improve, they'll recover. But I believe we have at least 3 years or more of migration coming in 1 year. So people that were thinking about it, that had a plan that over the next 1 to 5 years, they were planning to move to a city such as Boise, Salt Lake, Denver, Colorado Springs, Las Vegas, Reno, Sacramento. They have accelerated their plans, and we're seeing that in dramatic fashion here. When you talk to any home builder, there's no inventory that they have. Anything they build is sold. And so we think we're seeing at least 3+ years worth of migration in 1 year. Talking to apartment managers throughout the valley, they're seeing an uptick in pet owners. Historically, our market has been a very pet-friendly market. We've seen roughly 30 to 35% of all apartment residents having a pet, and expect that to be closer to 40 or 50% of apartment dwellers going forward to have pets. Everybody saw the cute videos about animal shelters being virtually empty because of the massive amount of people adopting pets. So that's a nice piece and an important element to consider as an apartment owner. We're seeing as we do transactions and inspections, sensitivity around, minimal inspections. We've seen where, buyers are doing more virtual tours, allowing tenants to take pictures of their units and send those across, as opposed to always walking every unit. The nice thing too with Idaho, you hear stories and read about the challenge of evictions on the coast and other cities, and the challenge of collections. In some markets, the perception is, hey, why should we have to pay rent? This is a tough time. Not thinking through, the impact that it has on apartment owners and paying taxes and everything else. Collections in the valley here have trended very strong. We've been in the mid to high 90s, and in the last month it's come off a bit, but still much higher than the national average. A concern with that is how well next round of stimulus gets approved. Clearly, strong collections are correlated to stimulus dollars, but there's a different mindset in Idaho. I also talked to a couple of clients that own properties in major metros where eviction restrictions have been in place. And just by nature of projects, you have bad apples. And they had the unfortunate situation where they had a couple of bad apples that were just on the verge of eviction back in February. And lo and behold, this all hits and now they can't evict. So they've had tenants that have been now in place for 8+ months that they've needed to evict regardless of COVID and have not been able to. So those are concerns in other markets that draw people into a market like Idaho, where it's much more landlord friendly, I guess you could say.
This is a quick fun slide sharing some amenities trends we are seeing as brokers. Like Clay said, there are more puppies in Boise than ever. Historically, Boise is a big dog market, but now it's even bigger. The draw for dog parks and dog washes is huge. We have even seen owners take an old closet at their community and turn it into a dog wash. We see this being the easiest, cheapest amenity for you to add to your community. And it would definitely help with your rents, and people would want to move there just for that dog wash. Also, pickleball is becoming a trend for millennials. The old and young love it. They're smaller courts than tennis, and more people are playing. It's definitely an idea you could add to a larger community, or maybe if you're in development, think about considering that as a common space in the grass. The natural amenities in Boise is a big deal. We have so many trails and river access points that just from your leasing website, you could be advertising trails near the community, and tenants would love that. The Clara, it's a new project built by Roundhouse Kennedy Wilson and Eagle, took advantage of a lake near the river, and they provide stand-up paddleboards, kayaks, people can rent them, and tenants can use them. And the lakes here in Boise are full of the stand-up paddleboarding crowd. People are swimming, fishing. These natural amenities are a huge draw, especially with COVID in the outdoor natural space.
All right, so and Chap's going to jump into the next slide. What we thought would be helpful, our phone rings off the hook with parties interested in coming to Boise, investing in Boise. We thought it'd be helpful to show 3 or 4 or 5 bullet points on why invest in Boise, and then also conversely, 4 or 5 bullet points on why is now a good time to sell. We are transactional brokers, so we would have strong arguments on both sides of the fence, and we wanted to just share those.
Yeah, as Clay said, 90% of our calls come from buyers. If we spend time on the phone with every buyer hours, we would never do a deal here. Everybody wants 1,000 units in Boise. I'm getting called from New York almost every day now, post-COVID. And we estimate that ratio of buyers to sellers to be 1,001. Buyers are seeing a strong in-migration to Boise. And as we're witnessing here live with the new plates, Washington, Oregon, California, plates all over our state. The rents are relatively low to all the other cities around us that are comparisons, and that's going to continue to increase with the migration and just to catch up to our surrounding cities. The interest rates are probably the biggest draw of buyers right now, even amidst this uncertain time with COVID-19. Record low interest rates, they're helping with cap rate depreciation. It's an inflation hedge, safer political environment here in Idaho, especially compared to the coastal states, and household formation uptick. A lot of people starting families, and that's a natural trend across the U.S. right now.
Yeah, so those are some of the highlights, and there are other reasons why it's a great time to buy. So why sell? Who would be looking to sell with all these buyers? We think there are some compelling reasons why one would sell. When you look at our market relative to its past, we're at record low cap rates, and that's a function of interest rates. And that's created a high watermark for apartment pricing. Oftentimes, as we've done quite a few transactions, and sellers have been surprised at the value that they can get out of their apartments today. And so, we'd love to evaluate any project that you might have or think about and share with you where we think pricing might be. Another reason that some have been open to sell is that we're in an environment with very low capital gains tax rates. Under the current presidential regime, that's quite attractive. The looming election, which is right in our doorstep, and where things could go if Biden gets in, clearly taxes go up. So there have been some parties that have been anxious to sell and kind of reset their capital under those lower capital gains tax rates. Another point is clearly there's going to be some elements of a recession nationwide. How that impacts the markets, we don't know. How much stimulus gets pumped into the system, we don't know. We have some offsetting elements to a recession in Boise. The migration in has helped offset, and we've seen that today. But that's a concern, is how that potentially could impact the market. If the stimulus money stops, that could impact rent collections, as we talked about before. And then even though the demographics generally, when you look at nationwide, the segment that's moving into that mid-20s age, which would create a household formation, is showing positive trend up, people can, in a recession and with concerns of job in employment, they could contract the household. You can move back in with your parents. So there is, while the demographics show a general trend of potential household expansion, if people start to revert back and moving back into home, then we'll see some contraction. So those would be reasons to sell. We took an example of what impact interest rates would have on the value of a project. Clearly, the dropping interest rates has created a massive value today that we're seeing. So, and we can again kind of walk through this. If you want to email, call, whatever, we can talk through it. So I'll move through this pretty quickly. The assumptions made in this example, we're assuming that the loan rate that you'd have on your project would take the 10-year treasury plus 220 basis points above that. We assume that the buying, selling cap rate would be the loan rate plus 175 basis points. So this would be the risk premium that an investor would assign to buying a project. And this is the risk premium that a lender would assign to lending on the project. So we walk through an example. If you take the far left column, assuming an apartment rent's $1,000, what times 12 months, and we kept this really simple without other income, vacancy, all that other fun stuff. So you assume you have revenue per door of $12,000 per year, expenses of $4,000. That might be a little light, but again, just an example. That would generate net operating income of $8,000 for that particular unit. At the time, the 10-year treasury is at 80 bips, and so your interest rate on borrowing is 3%, and the potential cap rate would be a 4 3/4 cap. Under that scenario, that project is worth $168,000 per unit. Now, if we move the 10-year treasury to its 5-year average, 2.45%, we apply that same premium to an interest rate on the loan. So now your loan goes from 3% to 4.65%. The cap rate has to move commensurately up to 6.15. Now the value of the apartment project goes from $168,000 per door down to $130,000. So that movement to the 5-year average impacts value by roughly 23%. Looked at another way, you could say, well, then what would my rent growth have to be to offset this impact in interest rate? And the answer is it's about a 20% increase in rents. So selling today versus waiting for interest rates to potentially rise, you're going to yield 23% more proceeds today than you would in this. Or you'd have to believe that you can move rents 20% to just catch up to where you were today. So just an example of the impact that interest rates have on value. And here we are at the end. We have, it's hard to say whether we went over because the first session went over, but I think we are roughly out of time. One thing that we would talk about is in the earlier presentation and throughout nationally, talk about affordability. There can only be so much done on the federal level with where they apply tax credits. There have been very good developers locally that have been on top of that and developing truly affordable subsidized housing. Our opinion is the market needs very open approvals for more development. If a development's allowed to go, then you add the units that are needed. You can see clearly that our market is playing major catch up. And so we're starting to see cities being resistant to apartment development, and they're listening, which is understandable, listening to city and residents in the community that don't, it's the NIMBYism, right? They don't want it in their backyard, but they recognize it's a need. We have to be more open to that element of development. We are extremely below other markets. And only once apartments are added, will we be able to start addressing the need for affordable housing? Chap, any other thoughts, any other comments?
We do have this recorded, and we will email out to people on this right now, and maybe over to a few more people if you missed this. So don't worry if you missed part of the first half.
Yeah, so thanks for taking time to be with us, and we are glad for the opportunity to present, and we look forward to working with you going forward.
Yep, thank you.